Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in the world of business. And today we're diving deep into Tianci International, incorporated filing your average company doesn't want you to read. This is a current report, basically a company telling us about significant events that have happened. It is like getting a postcard from the corporate world, but instead of beaches, it is about shareholder votes and board decisions. And let me tell you, Tianci International Incorporated has been busy. We've got updates on their annual meeting, director elections, and some pretty interesting proposals that could really shake things up for the company. So on the 13th of February 2026, Tianci International Incorporated held its big annual shareholder meeting. Now, out of all the shares that could have been voted, a whopping 75.15% showed up to have their say. That is a really strong showing, folks. It means a lot of shareholders care about what is going on and want to be involved in the company's decisions. First up, they had to elect their directors. Think of these as the captains of the ship. The shareholders elected 7 new captains: Xu Fanggao, Wei Fangying, Deng Yi, Man Yung, Fan Luojuan Chang, and Guilin Zhang. These folks will be steering the company until the next annual meeting. Looking at the vote breakdown, it is pretty clear the shareholders had confidence in this slate. For Director Xu Fanggao, for example, over 17.5 million shares voted for them. The number of shares withheld was minuscule in comparison, and the broker non. Votes, which are shares held by brokers that didn't get specific voting instructions, are also accounted for. This unanimous or near unanimous support suggests a strong endorsement of the proposed board. The same pattern holds true for all the directors elected. Every single one received overwhelming support from the shareholders. Next, shareholders voted on executive compensation. This is often called a say on pay vote. It is advisory, meaning the company isn't legally required to follow it, but it is a strong signal from the owners about whether they feel the executives are being paid fairly for their performance. In this case, the compensation was approved. Again, a huge number of shares voted for it, with a very small number voting against and even fewer abstaining. This tells us that shareholders, at least for now, are happy with how the top brass is being compensated. Now, this next one is really interesting. Shareholders also voted on how often they want to have that say on pay vote. Should it be every year, every 2 years, or every 3 years? The overwhelming majority, over 16.8 million votes, said they want to vote on executive compensation every single year. This shows a desire for continuous oversight and transparency when it comes to how the company's executives are being paid. Only a tiny fraction wanted less frequent votes, and a significant number abstained, likely because they were comfortable with the annual vote frequency. Moving on, the shareholders ratified the appointment of Bush and Associates CPA as the company's independent auditors for the fiscal year ending the 31st of July 2026. Essentially, they approved the accounting firm that will check the company's financial books to make sure everything is reported accurately. This also passed with flying colours, with nearly all voting shares in favour. This is a standard ratification, and the strong support indicates confidence in the chosen firm. Here is where things get really strategic. Proposal 5 was about increasing the number of authorised shares of common stock to a massive 2 billion. This is a huge jump. Why would a company want to do this? Well, it gives them a lot more flexibility. They can use these new shares for things like future acquisitions, stock splits, or even to raise more capital by selling them. The shareholders approved this with a very large majority voting in favour. This suggests they trust the board to use this increased authorisation wisely. And then there is Proposal 6, which is directly linked to having so many authorised shares. Shareholders authorised the board of directors to enact a reverse stock split. This means they could combine multiple existing shares into one new share. For example, a 1-for-10 reverse split would turn 10 old shares into one new share. This is often done to increase the stock price per share, which can make it more attractive to institutional investors or help a company avoid being delisted if its stock price falls too low. The ratio can range from 1-for-2 all the way up to 1-for-1. 100 again, this proposal passed with strong shareholder support, indicating trust in the board's ability to manage this maneuver. Finally, Proposal 7. This one is a bit different. The shareholders authorised the board to sell 30,000 shares of something called Series C preferred stock to RQS Capital Limited for a total of $30,000. Now, each of these preferred shares can be exchanged for 100 shares of common stock and has the same voting power as 100 common shares. At first glance, selling shares for $1 each might not seem like much, but the voting power is where it gets interesting. With 30,000 preferred shares, each worth 100 common shares in voting power, that is equivalent to 3 million common shares. This proposal saw a significant number of abstentions, over 14 million shares. This suggests that while the majority approved it, there is still a considerable portion of shareholders who are cautious or undecided about this specific transaction and its implications for voting control. After the shareholder meeting, the board of directors held its own meeting. They considered the shareholder vote on the frequency of say on pay and decided that they will include a shareholder vote on executive compensation in their proxy materials once each year. This directly reflects the strong shareholder preference shown in Proposal 3, demonstrating that the board is listening to its shareholders. So what does this all add up to? Tianci International Incorporated is taking some pretty bold steps. They are clearly seeking to increase their financial flexibility through share authorization and preparing for potential stock adjustments with the reverse split. The strong shareholder support for director elections and compensation indicates a level of trust in the current leadership. However, the high number of abstentions on the Series C preferred stock sale suggests that while shareholders are willing to give the board room to maneuver, they're also keeping a close eye on strategic decisions, especially those involving control and voting power. The board's quick decision to honour the annual say-on-pay vote shows responsiveness. Looking at it from a business strategy perspective, the company seems to be positioning itself for future growth, possibly through mergers or by making its stock more accessible to a wider range of investors. The authorised share increase is a big lever for them to pull, and the reverse split proposal suggests they might be aiming to shore up their stock price. The Series C preferred stock deal, while approved, is a bit of a wild card. The significant abstentions imply that the market may be sussing out the true value and long-term impact of granting such substantial voting rights for a relatively small upfront investment. In my opinion, Tianci International Incorporated is at a pivotal moment. They have a mandate from their shareholders to be aggressive, but they also need to be transparent and strategic in how they deploy these new powers. The success of the upcoming financial quarters will be key to justifying these bold moves. Alright, that is our deep dive into Tianci International Incorporated's latest filing. What is your take on these proposals and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And don't forget to subscribe for more corporate deconstructions. You can also join our Discord community for more exclusive content and discussions linked in the description. Thanks for watching, and we'll see you in the next one.